Warren Buffett is one of the richest and most influential people on the face of the planet today, but that was not always the case. Although he had big ambitions, Warren Buffett has not always been one of the richest men in the world. He did not even become a billionaire until he was 50 years old. As a matter of fact, more than 99% of Warren Buffett's wealth was earned after his 50th birthday. And today, we are going to share with you guys how Warren Edward Buffett turned into the infamous Oracle of Omaha, a nickname coined at him for his investment prowess. So stay here and watch this video till the end to know all of Buffett's journey. But before we begin, do not forget to like and share this video with your friends. Buffett's story is not your dramatic Hollywood rags to riches story, as he was born into quite a stable family. Buffett was born to Howard and Leila Buffett on August 30th, 1930 in Omaha, Nebraska. His father was a successful stockbroker and four-term United States congressman. Howard served terms on the Republican ticket, but himself adopted libertarian views. Despite being born into a well-off family, making money was one of his earliest interests. At the young age of 11 years, Buffett kicked off a lifetime of investing by making his first stock purchase. The future billionaire bought 3 shares of oil company Cities Service at about $38 per share. He eventually sold the stock at $40, making a profit of $2 per share. But he learned an important lesson about patience when the price later shot up to $200 per share. This is the reason why Buffett now suggests that investors not watch the market closely and to own good stocks for a long time. In his senior year of high school, Buffett, along with a friend, purchased a used pinball machine at a cost of $25. Buffett began to think about the potential profit and placed the machine in a nearby barbershop. Within months, he owned 3 machines in 3 different locations and later on sold the business to a war veteran for $1,200. Besides this, he used to sell soft drinks and had a paper route. When he was 14 years old, he invested his earnings from these small endeavors in 40 acres of land, which he then rented for a profit. At his father's suggestion, he applied to the University of Pennsylvania and was accepted. Unimpressed, Buffett left after 2 years, transferring to the University of Nebraska. Upon graduation, his father once again urged him to pursue a graduate degree. Buffett was rejected by Harvard, but eventually enrolled in Columbia after learning that Ben Graham, the father of value investing, was a professor there. After discovering that Graham is on the board of Geico Insurance, he took a train to Washington, D.C. and knocked on the door of its headquarters until a janitor let him in. After asking whether anyone was working that day, he found Lorimer Davison, an executive at Geico. They talked for 4 hours, while Warren questioned him on the business and insurance in general. After their discussion, Buffett was so excited about Geico that the following Monday, he spent the majority of his savings to purchase Geico stock, which eventually turned into a huge fortune. Today, he owns Geico entirely. Upon graduation, Graham refused to hire Buffett, even suggesting that he should never step to Wall Street. Meanwhile, Buffett returned to Omaha to work at his father's brokerage firm. He married Susan Thompson and they started a family. A short while later, Graham had a change of heart and offered Buffett a job in New York. Once in New York, Buffett had the chance to put all his investing knowledge to test. After gaining experience in New York, Buffett returned to Omaha and launched Buffett Partnership and purchased a house. Buffett started the company with only $100 of his own money and roughly $100,000 in total from 7 investing partners, who included his sister Doris and his aunt Alice, as well as his father-in-law. Buffett continued with his investments throughout the early 60s, and by 1962, he had grown his investors' assets to a total of $7.2 million, with his own stake worth over $1 million, fulfilling his promise to a family friend at the age of 13 that he will be a millionaire by the time he turns 30, or he will jump off the tallest building in Omaha. This was the time when he joined forces with Charlie Munger. Their collaboration eventually resulted in the development of Buffett's famous investment philosophy of looking at value investing as something more than an attempt to squeeze the last few dollars out of a dying business. Along the way, they purchased Berkshire Hathaway, a dying textile mill, at under $8 per share. What began as a value play became a long-term investment when the dying business showed some signs of life. Cash flow from the textile business was used to fund other investments. In 1985, Buffett shut down the textile business, but continued to use the name. 4 years later, Berkshire stock is now worth over $8,000. Warren now has a personal fortune of almost $4 billion. By 2006, he had grown Berkshire Hathaway into a behemoth with stock worth over $100,000 per share, while the investor's own net worth had grown exponentially to top $40 billion. Buffett's investment philosophy became one based on the principle of acquiring stock in well-managed but undervalued companies. He purchases stocks, withholding them indefinitely. Coca-Cola, American Express, and Gillette all met his criteria and have remained in Berkshire Hathaway's portfolio for many years. In many cases, he purchased the entire companies, but letting their management teams handle the everyday business. So you would think that with that amount of wealth, the Oracle of Omaha would live a luxurious life, but Buffett is famously frugal. He eats at McDonald's for breakfast every day, spending no more than $4 each time, and he still lives in the same home he bought in 1958. From childhood side hustles and stock purchases, to studying under investing gurus before launching his own investment firm more than 60 years ago, he's spent his life fine-tuning his conservative approach to investing that favors long-term value over short-term gains. What do you do with your money when you are the world's most successful investor? If you were Warren Buffett, you simply give it away. Buffett stunned the world in 2006 when he pledged to give away 85% of his fortune to the Bill and Melinda Gates Foundation. Buffett's donations will come in the form of Class B shares of his Berkshire stock. His total donation to the Gates Foundation is 10 million shares, which will be given out in 5% increments until his death, or until the foundation fails to meet the spending stipulation. Buffett has always planned to give the majority of his wealth to charitable cause, but insisted that it would occur posthumously. The change of heart was a rational move on Buffett's behalf. In 2010, Buffett and Bill Gates launched the Giving Pledge Foundation and began recruiting fellow billionaires to pledge to give at least half of their net worth to philanthropic causes. As of 2019, over 200 people have joined the campaign, with more than $500 billion pledged to the cause. Today, Berkshire Hathaway stock is valued at $489,200 per share, as the company portfolio represents a cross-section of the American economy and includes some of the world's most high-profile companies, including Amazon, Apple, American Airlines, Coca-Cola, and Disney, to name a few. Let's see what the future holds for this investment guru. Leave a comment on what you would do if you had as much wealth as Warren Buffett. Lastly, do not forget to subscribe and press the bell icon for future videos.